Everyone watching Applied Materials is asking the same thing right now. The stock jumped 12.4%, fueling FOMO. But does the momentum deserve it? Centura uniquely powers every 2 nanometers gate-all-around transistor. That translates to an immediate $2 billion equipment mandate for Applied Materials. The lab ran the numbers. Lab score, 71 out of 100 by. Applied Materials surged 12.39% to $704.53 as institutional volume confirms a massive breakout following a 5.2% earnings beat. Capital is rotating aggressively from software into the physical equipment layer. Does the engineering justify this premium? The reality is GAA, gate-all-around, a transistor architecture where the gate wraps around the channel. This occurs at the 2 nanometers node, the manufacturing generation with 2 nanometer features. Applied Materials dominates PVD, physical vapor deposition, a method for depositing thin films atom by atom for the required ruthenium liners. While AMEC competes in etching, they lack AMAT's 90% yield on selective epitaxy, growing crystalline layers on a substrate. Engineering confirms the moat. The 2 nanometers roadmap is impossible without Applied Materials. Verdict: by the strength. Quarterly financials showing modest revenue momentum for Applied by Q4 2026. Escalating trade war rhetoric will compress Applied Materials gross margins by 150 basis points, units equal to 1/100th of a percentage point, as logistics costs spike. While TSMC's 417 billion new Taiwan dollars May revenue signals a 30% surge in AI demand, the macro wave is hitting a reef of protectionism. The market celebrates a normalizing yield curve, the spread between long and short-term interest rates, at 0.31%, yet ignores the friction of trade war fears over Greenland. With a recession risk of only 8.9%, capital is rotating into the physical reliability of silicon, but the Fed's 3.63% rate floor remains a heavy anchor for high capex. Capital expenditure builds. Applied Materials is caught between a generational AI expansion and a geopolitical trade war. Applied Materials reported earnings per share of $2.86, beating the Wall Street estimate of $2.72 by 5.2%. A solid beat that signals strong execution. Applied Materials equipment is trending higher at $704.5. Applied Materials just dropped 4 press releases in 2 weeks, and not one mentions Semiconductor in the headline. That's the PR red flag. Management's official narrative: accelerate DRAM and advanced packaging for AI chips. The phrase is engineered to make investors see a data center moat. What they're not saying: the other 3 headlines: SENZ Smart Glasses Platform, Essilor Luxottica Optics Deal, 3D chip scaling, are all consumer, edge, and wearables. That's a pivot from capex-heavy data center equipment to margin-light consumer hardware, and they're burying it in the cadence. Insiders net sold 191,000 shares in 90 days, a pattern that historically precedes a margin reset. EPS beat by 5.2%, but R&D as a percent of revenue is flat at 12. The momentum breakdown for Applied Materials. RSI sits at 74, pointing to overbought territory, signaling caution on new entries. MACD is currently bullish, with the histogram crossing above 0. Applied Materials owns the 2 nanometers transition because its Centura platform, the modular hardware for precision material deposition, is mandatory for gate-all-around transistors. But an RSI of 74.0, a momentum gauge where over 70 indicates an overbought stock, warns this 11.9% surge is technically overextended. The core risk is whether U.S. CHIPS Act subsidies can replace lost high-margin China revenue. We rated this a strong buy at $656.36, and the 7.3% gain proves the hardware thesis is winning. If TSMC pulls in 2 nanometers orders by Q3 2026, Applied Materials hits the $850 target. If mature node demand craters, we retest $453.01. Our AI score of 71 confirms the 2 nanometers cycle will drive the breakout. Here's the macro picture shaping Applied Materials. Strict U.S. export controls on advanced gate-all-around transistor tools directly restrict Applied Materials from shipping its Centura Prime CVD and producer etch systems to leading-edge Chinese foundries like SMIC. Conversely, domestic subsidies from the U.S. CHIPS Act are accelerating tool installations at Intel's Ohio and TSMC's Arizona fabs, partially offsetting the loss of high-margin Chinese revenue. The massive industry pivot toward high-bandwidth memory and advanced packaging is driving unprecedented demand for AMAT's producer in via PCVD and Endura PVD systems used in through-silicon via metallization. As AI accelerators transition to backside power delivery, Applied Materials is uniquely positioned to dominate the market with its specialized e-beam metrology and Centura platform material engineering tools. Over the next 2 quarters, the primary upside catalyst is the rapid commercial pull-in of 2 nanometers gate-all-around tool suites by TSMC, which will significantly boost high-margin systems revenue. The most critical downside risk is an abrupt cyclical slowdown in mature node trailing capacity investments, which would severely hurt AMAT's high-volume ICAPS business. Top signal: Applied Materials' 15% margin expansion on new EUV tools. Is Applied Materials Incorporated a buy at current levels or a trap? Let's hear your thesis below. Remember, this is educational content, not investment advice. Always conduct your own due diligence and understand that past performance is no guarantee of future results. We share analysis based on publicly available data, but market conditions can shift rapidly and individual outcomes will vary. If you want our full breakdown on Rocket Lab, the link is in the description. Subscribe so you don't miss Tuesday's deep dive. We're tearing down Qualcomm. Stay sharp, keep engineering the edge.